What is going on, everybody? It's Stas here. Welcome back to another video. So today, like we do every single Sunday, we're going to break down my game plan for this upcoming week in the stock market. We're going to go over charts, stocks, my thoughts on the markets, plus more. We're going to go over what happened last month in September, and we're going to talk about what to expect in October for the stock market. And if you guys have studied history, not saying this is going to happen again, but a lot of the major crashes in history have occurred in October. So I want to break down a lot of things in this video. So if you all find value, hit the like button, subscribe, check out my Patreon down below if you want my buy, sells, call outs, morning update videos, plus more. And let's get right into the video. So it's no surprise, no secret at this point, unless you guys have been hibernating the last month, that the stock market has gotten hit very hard. SPY, which tracks the S&P, has gone from 454 down to 425. That is a drop of 6% from the 3rd of September up until this past Friday, where we saw that low point hit at 425, right? And that was actually, was that the 1st of October? So I guess we can't count that, right? Okay, can't count that low point of 425, but we went from, let's say, 436 at the low, 30th of September, down from 454 in the beginning of September. So it was a bloody month, right? And we actually talked about this before September even happened. If you guys watch my channel all the time, you should remember this. And if you study history yourselves, you should know this already. September is not the best month for the stock market. In fact, it's the worst month. I think back from 1945, 55, something like that, up until present day. On average here, the S&P returned roughly 0.56% in the red, if I remember that number correctly, which I believe that is the correct figure. And this month was way worse than that. We had the Dow down 3.5% in September. The S&P went down 3.9%. The NASDAQ 100, or the NASDAQ composite, went down 4.6%. And this was the worst September in about a decade, since 2011, when the European debt crisis cracked the markets. And again, we discussed all of this stuff prior to September. And, I don't like to time the market. I'm not saying, avoid September, invest in October. I don't think that's wise, but understanding history is wise. And knowing what happened in the past is wise. And we talked about this on Friday, how the rally we saw from 425 up to about 436, 434, where we ended up closing. This could potentially be a bull trap. That is what I'm watching for this upcoming week, right? I want to see if we end up breaking out a 438, 440 on SPY. Maybe we start taking out the main moving average right around that level I just mentioned, 438, 440. From there, we could see potentially a breakout here. But listen, guys, if we start struggling in the mid 430s, we dump under 430 back into the 420s, that's not going to be good whatsoever, technically speaking. The one thing worth mentioning here is I am seeing a bit of a bullish divergence. Aha, look at that. You guys see this 20-day chart. Look at the bottom. RSI has been strengthening since the 28th of September as we've been downtrending. So that means maybe this relief rally from Friday could have some legs, but I'm not too convinced quite yet. Again, until we start breaking out of that 440 level, and quite frankly, mid 440s plus. That's where I want to see SPY go to. And October, let's talk a little bit about October, because like I mentioned in the intro, we've seen a lot of crashes occur in October, some of the most prominent in history, and this has been coined the month of crashes. The bank panic of 1907, we saw a huge crash, and that occurred in October. The stock market crash of 1929, you guys remember that? That was October. Well, nobody watching this video was alive then. At least I don't think anybody is 98 or what's the math on that? 91 years old watching this video. But hey, who knows? Maybe I'm wrong. And Black Monday of 1987, that also happened in October. So let me show you guys this interesting chart here. let's pop it up on Google Chrome very quickly. And believe it or not, this is the first time that I've seen this, and it's actually pretty cool. This is a Money Chimp, I think it's called, moneychimp.com, and it shows you all the up years and down years based on these different months, and you obviously select the different months you want to see. So for this video, let's look at October. Let's pop up October, and you guys can see the biggest down years, the biggest up years. Let's see the biggest up year in history for October. For the month in terms of the different years here. Wow, in 1974, we had a 16% month of October in the green, which is crazy. 1982, we had an 11% green month in October. Let's see here. What are the other big ones? 98, we had an 8% October month. 2002, 8%. 2011, about 10%, which is interesting because remember that stat we just read? September was the worst month since 2011. Ooh, we might be onto something here. September was the worst month this past September since 2011, right? And then if you look at October in 2011, it rebounded 10%. So are we in store for a similar rebound 10 years later this October, as we saw 10 years ago after the rough September 10 years ago when October rallied 11% in 2011? Hey, guys, if history repeats itself, October could be very hardcore this year rather. And if we look at the biggest drops in October's history, the biggest down years, 2008, which makes sense. We dropped 17% in October. 1987, what was that? The Black Monday. Obviously, I wasn't alive then. A lot of you guys probably were. This went down 22% almost in October of 1987. And if we go down a bit more, there really weren't any other big prominent crashes. Well, I guess 1978, we had a 9% crash, 79, 6-7%. That's pretty big. So this should give you a bit of insight on how October has been, the up years, the down years, and feel free to go look this up. Again, this is my first time seeing this. It's called the monthly returns. Go to moneychimp.com/features/monthly returns, and you should be able to find this. So that's pretty cool. I'm definitely going to be playing with that over the next coming months, and maybe we feature this in more videos in the upcoming months here, as I'm not planning on ever stopping making these videos. Oops. Let me move that back. Let's figure this out really quickly, guys. So what do you think? I mean, are you nervous about October? Are you just investing like normal? Are you keeping more cash on the sidelines than you normally do? Honestly, I'd love to know what you think. Drop me a comment down below. And as always, make sure to smash that like button and make sure to subscribe, as both of those really help me out in the overall YouTube algorithm. So now that we talked about September, October, we looked at some numbers, we broke down some charts, let's get into the meat and potatoes of this video, and let's talk about some good old stocks. Number one, we got to talk about Tesla, TSLA. We just got delivery numbers. Tesla delivered 241,300 EVs during the third quarter of 2021, and that came out on Saturday. Analysts predicted that Tesla would deliver around 220,000 vehicles, so they beat that by a pretty good margin. And according to the estimates, that was 220. According to the estimates by Street Account as of September 30th, and the company produced 237,823 cars in the period ending September 30th, and that is a lot higher from the last quarter, or no, the deliveries were a lot higher from the last quarter. We'll talk about that in a second. And out of the 237,000 they produced, 228,000 of those were Model 3 and Model Y, and 8,900 of them roughly were Model S and Model X. And last quarter, Tesla delivered 201,250 vehicles and produced 206,000 cars, even as production of its Model S and X vehicles fell below 2,500. So look at that growth. I mean, quarter over quarter, Tesla delivered 201,000 in the previous quarter, And now the data we just got, 240,000, 241,000. So that is a 40,000 delivery or vehicle delivery pop quarter over quarter. That is pretty good. And the fact that they beat the estimate, even better. So I would be surprised. Well, I don't want to say that for sure, but I'd be surprised. Okay, I would be surprised if Tesla sold off big time on this news. I wouldn't be surprised if Tesla were to now rip maybe towards 800, maybe 800 plus this upcoming week, especially if the market stabilize a bit. We see maybe even a couple green days in a row. There's no doubt in my mind Tesla will probably, nothing's guaranteed, but will probably rip out of this 785, 790 resistance, which has been a sticking point not only this past week, but also a couple of months ago in April, like we've discussed many times in the past. So great news from Tesla. Look for a breakout here. And full disclosure, like many of you, I am long Tesla. It's not a massive position for me. It's not like maybe some of your positions out there or some of these other YouTubers where it's 50% of the portfolio. It's nothing like that for me. It's probably around 5% of my portfolio, which you might argue it's a little small, but for me, I'm cool with that. And I just want to let you guys know, yes, full disclosure, I am long Tesla. So I'm going to put an alert at 790. We'll see what it does there this upcoming week. Pepsi, a little bit of a less exciting company than Tesla. I don't think anybody would argue that. Pepsi reports earnings this upcoming week on, let's see here, the 5th. So that's in 2 days. And they report in the morning. That's Tuesday morning at 7:15 a.m. Central Standard Time. And you guys can see Pepsi's taken a bit of a haircut from 160. Now it's at 150. It's down about 6-7%. And it's trading under the moving averages. We're also noticing a death cross here, which means there could be more downside, but I'm not too convinced there will be more downside until we start breaching under this trend line that I just drew and $145, which was the low point, the previous higher low from the end of June. So I think the uptrend is safe here on Pepsi until it starts going 140, 135, 130. That is where we could get a little bit more selling. And if I show you guys this 3-year chart, we could see a little bit more selling. Honestly, if that trend breaks on the 4-hour chart, we could be going 145 here on the 3-year chart, which wouldn't be the end of the world. I mean, that's only $5 lower from here. And historically speaking, the 50 moving average on this 3-year chart, which would be right around 145, that has been support. So I honestly expect buyers to potentially step in there. So keep your eyes out on Pepsi. Square is another one that I'm looking at. Ticker symbol SQ, and my whole table is vibrating right now. I probably should not have done a load of laundry before filming this video. So if you guys hear a little bit of a buzz or a little vibration, it's my laundry, all right? It's my laundry. So Square, this one's down a decent chunk from 290 to about 240 at this point. That's down about 17%. It's almost in a bear market, and I'm noticing it's fighting to hold 240 right now at a higher low based on this trend line that I've drawn right here. And if I pull back the 3-year chart to the 3-year chart, I'm noticing a bit of an ascending triangle, right? We've pulled back 17%. We're holding the higher low right above that 50 moving average, the green trend line, and we see a clear resistance from the beginning of 2021 at about 280, 290, and we've been uptrending into that ever since the beginning of May. So I think ultimately, as long as we're moving above the upwards trend line, which we are as of now, as long as we're holding the 50 moving average as well, Square has potential to start squeezing back up to 250, 60, 70, 80, maybe even above 300, at some point, maybe towards the end of the year. That's potentially in the cards right now. And of course, guys, you can't predict everything in the stock market. There's a lot of moving parts right now, tapering, the Fed, Delta, you guys know, Evergrande, there's so much crap going on right now, and there always is a lot of crap going on, so don't just buy this blindly, or any stock that I talk about, or anybody out there talks about for that matter, because there's always risk involved. You guys got to understand that. So that's Square. Etsy is another one I'm watching here. It's pulled back a bit. It's kind of in a similar situation as Square. We have resistance at 225. We've been uptrending since May, and at this point, we've taken a nice haircut the past couple of days. It's down about 11%, putting it in correction territory. So I want to see if Etsy holds around 200, 205, which as of now it is, right around that 180 SMA on this 4-hour chart. And from there, do we end up seeing a push towards the top of this resistance? It also kind of looks like a triangle, so maybe we break out of 225 eventually. The triangle plays out. So keep your eyes on Etsy. CRM is another one I'm looking at. This one had a crazy run last week, and it was because of the guidance. They raised their guidance for, I believe, full year 23 sales. Looking very solid. They might have done that for EPS as well. Let me double check, guys. They raised, it was full year 23 sales guidance and 22 sales guidance. Very strong. I'm not seeing anything on EPS here. Maybe I'm wrong on that. Maybe they didn't raise their EPS. But the fact that they raised sales guidance, hey, that's good enough for me. And we took that push, or rather we saw a push to 285, right? From 260, that was a 10% move, and like expected, it was very oversold, or rather overbought, and it pulled back a bit towards 270, 268, held that 50 SMA on the 4-hour chart, popped right above it, had a solid Friday, up almost 1.5%, and now I'm looking at it above 274, 275 as a potential breakout, as a potential continuation play, especially since it held above 275, which was the double top resistance in the end of August. It held above it as support. So I think CRM could start continuing, or rather start, what am I trying to say here? I feel like it could continue this push up after it sold off, and the RSI got to a healthier spot. So CRM looking solid. I like it. It's about dang time this thing has been moving, or starting to move. Well, it has been the past couple of months, but if you guys watched my channel, it was late 2020 when CRM was getting clobbered, even early 21. We were talking about this, and it's about dang time it's moving. So that's CRM. Upwork is another one that I've been talking about a lot recently, UPWK. This is one that I own right now as a swing trade. I've been buying it, and you guys in my Patreon, you know that, as you all get my real-time buys, sells, call-outs. There's a lot of exclusive content on Patreon as well. Check it out down below if you're interested. You guys know, I've been buying Upwork. I like this pullback on it overall. My average is right around 47.70 right now. I'm up on the position, and I think there's more juice left in this rally. It saw a bit of a haircut last week. That's when I started buying it. I believe I bought initially at about 48 something. Bought more at 47, bought more in the 46, 45 level, and now I'm just literally riding it up. And I believe this does have potential to go back to the low mid-50s, which I'm looking at it. Now that it's breaking above both moving averages, I'm seeing this going higher. So I'm holding it. I'm long Upwork. CCL is another one that I'm looking at here, which is kind of similar. Well, it's not, the pattern is not the same as CRM, but it's very similar in terms of the past couple of days, what has occurred, right? We saw a huge run up in CRM, got overbought, pulled back. Now it's looking like buyers are stepping in on the pullback. Very similar to CCL. This thing ran up like crazy from 23 to 27, which we called out, by the way, and it pulled back pretty rapidly from 27 to about 24.75. That was a 9-10% pullback, and now buyers are stepping in at around the 50 moving average and pushing this thing right back up. As of Friday, it went up 4%. And there goes my freaking laundry already, or again, rather. It's rattling the whole floor right here. And if you guys hear that, oh, there it goes. I feel like there's a freaking tornado, or not a tornado, an earthquake in my office right now. But overall, guys, CCL, it's looking like it wants to potentially push out of this channel. If I extend it to the right, you guys can see it's going to retest the top of that channel where maybe we start seeing a meteoric rise from there. DraftKings is another one that I own. I've been buying. I own this one at about $50.20, I believe, is my average. And I think this has, sure, it could go lower. We could see more rockiness, volatility. In fact, I expect that. But I think ultimately in a couple of weeks, month, 2-3 months, DraftKings is going to be higher than where it is right now, which is why I'm buying it. I mean, the stock is down. It got down to 25% in the red from just recently 65 per share. It got to 47. So I bought the dip. I started buying, I think at 51. Bought some at 48.60, something like that. And again, now my average is just a hair above 50. So I'm holding on to this. I plan on buying more. If it gets back into the 40s, I'd love to buy more. And I'm just holding on. And another thing I'm looking out for this upcoming week is oil. And I've been looking out for oil. I mean, I've been buying oil stocks, XLE to be precise with you guys in terms of what I've been buying, which is a group of oil stocks into one, also known as an ETF, right? You guys know what ETFs are. And I want to see if oil, I'm hawking this, guys. I want to see if this breaks out of 77. That was the high from early July. I think we're ultimately going to go there. I've mentioned this before. The chart looks extremely bullish. I mean, this is setting up for a breakout. It's not setting up for a sell-off, at least from the way I'm seeing it. So I think if oil breaks 77, we're going 80 plus, no doubt about it. And XLE, which is one I've been buying for the past couple of months. Again, you guys on my Patreon know that. I think this one's going 56 plus at least, especially if oil gets 80 plus a barrel. I think XLE is going 70 a share, 65 a share, no doubt about it. On top of that, there's a good dividend with it. And I'm also looking at Occidental Petroleum, which is breaking out, and it looks like it wants to go mid-30s. I'm also looking at ExxonMobil, which is breaking out. Maybe it wants to go back and retest those highs from a couple of months ago in the mid-60s. So overall, guys, that's kind of what I'm looking at. A little breakdown of September, October, historically speaking. We talked about Tesla, a couple of stocks. Well, really just one stock that's reporting earnings this week. So what do you guys think? Let me know in the comments. Drop a like if you all enjoyed the video. And make sure to subscribe and check out my Patreon link down below. If you guys want my buys, sells, call-outs, all in real time, literally all the moves I'm making from covered calls, selling stocks, locking in profits, long-term investments, all of that is on Patreon. Plus, I make a morning update video every day, every trading day for all my top tier patrons. Check it out, link down below. Make sure to also get your $30 from M1, your 2 stocks from Webull, literally free money, also link down below. And that's it. I'll catch you guys in the next video, which I made a FedEx video yesterday. If you guys want to see my FedEx analysis, what's going on there, whether or not I'm buying, check it out. It's popped up right here. I'll see you guys there. Thanks for watching. Again, as always, keep crushing the markets. Stay safe out there. Peace out, guys.